The federal government is the single largest customer with over $745 billion. Clients rush into an implementation, taking time to define requirements. Planning out that process is extremely important. There's nothing worse than doing a contract closeout and having to go back and look in two different systems. At the end of the day, saves an organization money because that financial partner should know the right questions to ask and should be able to reduce time in helping to drive those key decisions.
Why does the accounting system matter, and what's at stake for a government contractor, a not-for-profit, or other project-based firm when they're selecting a system?
Thanks, Ted. Really, when you're talking about the federal government is the single largest customer with over $745 billion in federal procurements per year based on 2025 numbers. Just the federal government alone, not counting state, local, other municipalities. And really, when you do work with the federal government, as anyone who currently does work with the federal government knows, compliance is really critical when doing work with the federal government. There is risks associated with reporting errors. There's increased oversight from DCAA and other audit organizations. Really, when the federal government is a customer, the federal government has far more access to financial information and records than any other customer would normally have in a commercial setting. And really, if you run afoul of some of those items, it can really have a severe impact on cash flow disruptions. If there are question costs or problems and it starts fouling up your ability to submit invoices and get paid, it can really have significant disruptions on that cash flow cycle. Now, the benefits, obviously, when looking at a system implementation, is potentially increased efficiency, gaining increased insights into the organization, really being able to look at project performance and really understand the drivers of that project performance, and really setting an organization up for scalable growth. As an organization establishes itself and grows, having the right system and the right platform to be able to build and scale on is extremely important. Today's presentation was really focused in on scaling government contractors and nonprofits, as well as organizations with R&D that have the requirement for really kind of tracking project-based financials for their organizations.
What are the biggest implementation mistakes that we've seen when we're taking over the accounting for a new client?
I would say that the biggest thing that we see a lot of times is that clients rush into an implementation without taking the time to properly identify the requirements, identify the key drivers of the desired outcomes from that implementation. So really, kind of taking time to define requirements, planning out that process is extremely important. Organizations a lot of times will make a decision and then be fixated on a date that they want to go live on. And then as a result, the whole process gets compressed and shortened, which potentially leads to issues downstream. The next thing that we see a lot of organizations struggle with is poor data migration, especially when there's a requirement to retain contractor project data to be able to close out contracts, making sure that organizations are not straddling multiple systems more than they have to or for longer than they have to. There's nothing worse than doing a contract closeout and having to go back and look in two different systems or a system that may have been mothballed to try to extract information and be able to properly close out a contract. The next one, a lot of times as timelines get shortened and organizations are rushing to go live, inadequate training is something that we see. That's really for sort of the users of the system, like the super users, if you will, as well as just sort of the general staff that may be just going into that system to complete a timesheet, fill out an expense report, making sure that there is communication and enough training so that everyone in the organization is comfortable with that change is a mistake that we see a lot of times. Next one is not always identifying opportunities for integrations between systems or the opportunity to eliminate redundancies and entering data into multiple systems. So taking the time to understand all of the different systems that house information and where those can be consolidated and streamlined is a mistake that we see. Next one, compliance neglect. Obviously, as stated at the beginning, compliance is one of the key drivers of an organization making the decision to change systems. And so not completely documenting and understanding what those risks are and ensuring that the system is set up properly to account for those is a mistake that we see. And then the last one is making sure that there's enough cost and time. Organizations a lot of times will underestimate the cost and the time associated with an implementation, which ends up getting, scrunching everything at the end and getting people in a situation where they're having to sprint for the finish line.
Why does the implementation partner matter, and how well do they really need to understand your business?
I would say that the single biggest thing that I have seen in being involved in multiple implementations over the years and having to come in and fix implementations is that one of the key points of failure is a lot of times organization will select a system and will not necessarily understand the implications of the decisions that are being made up front, for instance, and how the back end is being structured for reporting purposes or for indirect rate purposes, or how a project structure is designed to be able to allow for a multi-level reporting by option year or by contractor, by task order, whatever that might be. And a lot of times the financial partner who's involved in that implementation, it's a failure on their side as well because they didn't do a proper job of explaining the implications of the decisions being made. And so it's really important that when an organization is thinking about doing something as important as a new software ERP implementation, that they are selecting a partner that really kind of understands their business and helps guide them through making those key upfront decisions and the implications of those decisions so that ultimately the system that is designed and built is one that will scale as that organization grows. Really, partners need to understand the various different systems, the workflows, where connections need to be made, those key drivers of selecting the right system, really kind of looking at for an organization, helping to align the people, the processes, post-implementation, the technology stack, making sure those integrations are done, the organizational structure and the reporting structure of that organization, and really the underlying data. What information needs to be pulled over? How does it need to be structured so that information can be appropriately reported? Is really the combination of the people, process, technology, organization, and data that financial partner should be helping an organization through as part of that implementation process. Really, when looking at a financial partner, involving a financial partner and involving a financial partner upfront, at the end of the day, saves an organization money because that financial partner should know the right questions to ask and should be able to reduce time and helping to drive those key decisions. It allows in-house staff to really be able to focus on the day-to-day and to continue operations while allowing that financial partner to focus on the technical implementation, and really as well as kind of helping to navigate sort of those FAR, DCAA, those compliance risks. Those are all kind of the key benefits of having that right financial partner.
So what are the top implementation concerns that most firms have when they're going live with the new accounting software?
So the first one, as I mentioned, how do you avoid disrupting billing and payroll? How do you avoid getting cash in? And how do you avoid issues with paying employees? As mentioned, really kind of phasing that rollout, doing the billing in the prior system for that first month gives you a full month to make sure that billing is operating properly. Build in contingencies, having enough time in that process, like I said, doing semi-monthly timesheets so that you've got half a month to resolve any issues, plus whatever your payroll lag is between when timesheets are completed and employees are getting paid. Building in enough time in those key functions up front to allow for any adjustments if any problems are encountered. Next one, measuring system improvement. Really, one of the things that's important for organizations is to realize that there are a lot of stakeholders involved in implementation. There are people that ultimately get financial information from the system, everything from project management to owners and key executives. And so involving those stakeholders in the process up front to make sure that everyone's requirements are being captured, and then circling back with those same individuals post-launch to make sure that ultimately everyone in the organization is getting those desired benefits from making that implementation. So measuring that post-implementation success is extremely important across all key stakeholders. Next one, duplicate data entry. As we talked about, any system implementation, there is an opportunity to evaluate all corporate systems currently in place, and where there's opportunities for integrations to occur to focus in on single source of truth, really looking at who is responsible for entering in information and being able to take information from that system and then ultimately use it to populate throughout other impacted systems as a result. So the next one is staying audit ready year round. It's really important, especially post-implementation and all, to have a monthly reporting cadence, to be closing those books out each month, to be going through the full closeout process. If, for instance, running indirect rates monthly and then tying out those indirect rates to really validate the output of the system and to make sure that the system is operating as intended. We've been involved with multiple clients where they calculate the rates, but they're not tying those rates out, and then come to find out those rates are incorrect because they have costs that are getting captured and not properly allocating. Really kind of continuing to monitor and look at reconciliations on a regular monthly basis is extremely important. Getting team adoption is really important to involve all key stakeholders upfront during the planning stage. And as I mentioned, make sure that you're following up with stakeholders kind of post-implementation to ensure that requirements are being met. If it's project managers, make sure that they're getting the desired visibility into project results and that those efficiencies and those gains in information are being realized. And where required, follow up or make adjustments post-implementation to ensure that the team is ultimately bought into the success of that implementation.
For those thinking about converting their accounting software, what are the best practices and actions that they should take to improve the probability of success?
Really, for an organization that is considering an implementation or thinking whether or not now is the right time, as I've kind of mentioned, selecting an external partner to help guide the organization through that process is extremely important. That partner should be able to bring lessons learned, help to really cut down the decision-making time and help avoid a lot of the pitfalls that organizations normally face with an implementation. Really, as part of that, evaluating kind of the current systems in place and look for any risk for compliance or inefficient processes and where an implementation may make sense. Really look at what are the reasons for the system change. Is now the correct time? as well as what the key requirements, what are the key desired outcomes from that implementation. Next would be kind of a system selection process, which that right financial partner should be able to assist with. And that's really looking at what solutions are potentially out there. There are new solutions that are constantly coming out, new ways to attack problems, and looking at doing kind of that market research, then looking at demos of potential solutions and conducting interviews of those organizations, making sure that all those needs are being met, or if there are any gaps, how those gaps can potentially be mitigated. Then once that's concluded, looking at kind of the capabilities versus the requirements, which solution best stacks up against the needs of the organization, what are the must-haves versus the nice-to-haves, and then ultimately making a selection. And then once that selection is made, then making sure that there's a plan for that implementation, focusing on that phased implementation, as well as ensuring that there's enough time up front for training, and then ultimately defining what are the success metrics of a successful implementation, what do we want to track, and how do we ensure that ultimately we are getting all the benefits that are intended from that system implementation process.